Hey, good morning, traders. This is Julie, and it is Wednesday, EIA Day. We've got several things on the calendar today I want to talk about. Um, we have on my website, my blog, I've got the investing.com calendar. You can change your time zone to your time zone so that you can see the calendar in your time area. And if you scroll down to Wednesday, you see that we have the non-farm payroll change coming up at 7:15, and they're forecasting a higher employment um, in non-farm payrolls based on the last release. So a higher expected reading should be taken as positive bullish for the United States dollar, while a lower reading should be taken as negative bearish for the United States dollar. So if we get a higher reading, that's going to put some pressure on crude because crude trades conversely to the dollar. We also have we have the EIA today, the inventories coming out, and they're forecasting a 1.5 million barrel inventory build, which is lower than last week. So that's going to be kind of a magic trick to pull out of their hat. But I heard someone on the Squawk Box TV say that they were already coming out ahead of the or after the API release, which shows a higher build, saying no, it's going to be a lower build. So I don't know how all of that works, whether they came out and actually talked to a group of people saying it was going to be lower, but I think Miss Yellen coming out and speaking today is going to be more detrimental than the EIA report because she will be jawboning the dollar down, and that is going to be offset by the non-farm payroll. So you're going to have the non-farm payroll, if it's a good report, bringing the dollar down or bringing the dollar up, excuse me, and she's going to come out and she's going to be jawboning it down because she needs the inflation up. So what does that mean? That means stay out of the market for crude until all of this comes out. Be very careful when she starts speaking at that time to get out of the market, and be careful around the non-farm payroll at 7:15 Central Time. As far as crude, we have I wanted to show you this daily chart. We found our standard deviation from last year's value. This is the yearly VWAP. And here's that second standard deviation. And we just now ran up to it and hit a brick wall in the Globex. So it's pulling back right here on my magic level. And here's the pullback. Hit the level and is starting to bounce. So I'm assuming that we're going to roll over here and break the value low and pull back for the EIA. So it's going to be short-term intraday trading until the EIA report comes out. To show you the last two sessions breakout, we had a wonderful move out of this area. We got the breakout yesterday, pulled back, and then resumed the uptrend in the Globex, and that's where it hit my $62 level with the yearly VWAP. So I'm expecting a pullback to test this area here at 61. I'm going to be looking to fade this up here, and we've got just the tiniest bit of divergence on here also, as you can see, signaling the pullback into the reports. But because of all the reports and the Federal Reserve Chairwoman speaking, I'm going to recommend extreme caution in your intraday trading today. Yesterday's value area high is $60.87. That is an area that will likely get retouched. Yesterday's initial balance high is $60.78. That is an area that's likely to get touched. And yesterday's VPOT point of control, volume point of control, is $60.41. Also an area that's likely to be touched. But we are definitely uptrending, but it could be the pause before the reports. How much of a pause, I can't say, but I know that today is going to be volatile. So be very careful trading, and so will I. Thank you so much.